Guys, what's going on? It's Rekt Capital and welcome back to the channel. We're going to be talking about the Pi Cycle Top Indicator. As we've been speaking over the past few weeks, we've had a few interesting developments in that data science indicator. So let's dive right into it. Subscribe to the channel for more videos like this in the future, and let's talk about the Pi Cycle Top Indicator. So in late June, but we've been talking about this much earlier than that, in fact. But in mid-June, late June, I mentioned this in a Twitter tweet, and the 111-day moving average is a key resistance to watch out for if we're paying attention to the Pi Cycle Top Indicator. And of course, in late June, this price point was at 49,000. So at the time, what I was watching for was for that moving average to remain as a resistance. But of course, naturally, as time passes, this resistance should be declining. However, because it's a 111-day moving average, it takes into account the previous 111 days of price action, so the changes in this moving average are going to take quite a while. But nonetheless, fast forward a few months later into the future, and we've had a picture-perfect rejection from this Pi Cycle Top Indicator resistance, the 111-day moving average. But at the same time, it's interesting to note that in the months that have since passed, we've seen an adjustment in the 111-day moving average from 49,000 to 42,000. So now that's where the resistance resides. And it's really important because this is going to be the main resistance to watch out for. And I thought this resistance was going to be quite confluent with the bottom of the Wyckoff distribution range at around the mid 40s. So 42,000 is definitely approximately confluent, not picture perfect, but approximately. So what should we be paying attention to now? Because we have this rejection from the 111-day moving average. We need to now pay attention to what could happen next. And there are many similarities between the mid-cycle correction of 2013 and the mid-cycle correction of 2021. So let's have a look at a scenario that I'm watching for through the lens of the Pi Cycle Top. So here we had that mid-cycle correction in 2013, and once we'd bottomed, of course, we started to trend upwards. And this 111-day moving average would be a resistance. In fact, the more reliable resistance was going to be this moving average that is 350 times 2. But of course, in this current period, that moving average is at a much higher price point simply because we're seeing tremendous deviation in the shorter moving average, which moves a little bit faster. But nonetheless, what I'm going to be watching for is this 111-day moving average to continue figuring out a resistance. But how strong is that resistance? Because we could see that rejection occur here, but to form a higher low, right? It might be a higher low before we break back above it, turn that orange daily moving average into a support before moving higher. That's one of the scenarios that I'm going to be watching for in terms of this Pi Cycle Top moving average, because we don't want to be in a position where we can't flick back above this daily moving average. In fact, we don't want to be in a position where we can't turn it back into a support like over here, because breaking back above it is one thing, but losing it as a support is another, which could prove quite bearish, because in the past, breaking down from it as a support hasn't been a good thing. But also, if we look back to this cycle, for instance, constant rejections from the orange daily moving average here. Constant rejection. In fact, brief upside deviations on a few occasions here. So really important to first not see those rejections here. And if those rejections occur, can we see a higher low? And of course, if we break back above this resistance, can we maintain it as a support? Because breaking below that support isn't a good sign either. So at the moment, we are rejecting from here, but how much will we reject? And I'm going to be talking about a few price points to watch out for on this recent rejection. What should we watch out for on just looking at supports? What's going to be important in terms of dictating whether we indeed form a higher low at around the mid 30s, lower 30s. I'm going to be sharing those insights with you, but at the moment, really important to understand that this 42,000 daily moving average is a resistance. It will continue to figure as a resistance, but as time passes, this resistance is going to trend downwards. And 39,000, for instance, is the range high of a weekly range. So could we see a scenario where that 39,000 error starts to align with this 42,000, or at least this 111-day moving average on the pi cycle top indicator? Because at the same time, we're also seeing the 200 EMA align at the 39,000 area. So we might be starting to see all these different EMAs, the long-term investor sentiment EMA, apologies, that is the 200-day EMA, and the pi cycle top indicator resistance, which is the 111-day MA. Will that align with a key resistance that we see in the weekly range? Really interesting scenario to bear in mind, but I'll be talking to you about more scenarios and support levels on the way down on this recent rejection, just to give you an idea of what to expect from Bitcoin going forward. In any case, guys, thank you so much for watching today. Subscribe to the channel for more videos like this in the future. And of course, if you like the video, like it. In any case, guys, that's about it. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.